one of those finance leaders whom I enjoy talking to, in spite of me being on the tech side. So a little bit more about John is I think he morphed into a finance leader from a technical person. It's over time, but currently he's a COO at Lean Legal, if I got the name right. Uh, what we'll do is we so at Hyperforce, essentially, we are trying to understand what CFOs do and the finance teams do. So this is first of our fireside chat series where I just want to spend time and figure out what is a dream AI agent for the CFO. Welcome, John, and maybe let's just get started.
Sounds good.
All right. So let's just say, what do you do every day? What are the key tasks that you worry about, and what are like your? I woke up in the morning, got up, went to office. What happens next?
Yeah. As a CFO role, it's what was surprising me when I first became a CFO is how different that is than even a director, like a controller, or someone doing AR or AP or banking. There's all these different roles in finance, and the CFO role is different. And I've done it now a few different times in different companies of different sizes, and the shortest answer is you own the financial forecast. And I remember talking to someone saying, we can screw up on lots of other things. You can drop the ball on a billing or a different thing, but you cannot screw up on the financial forecast. So really it's about, there's a cadence around quarterly planning and then monthly, plan versus actuals updates. But on a daily basis, whatever you need to be doing to help enable and have a more accurate financial forecast is the answer. That's really your key job, is to fix and enable supporting what you said you were going to do, and then understanding what you need to forecast next time around driving that. Now, there's other parts, obviously, that are part of the CFO's role that you could say is raising capital and delivering on what you said as far as capital, and signing off on audits and all these other things. And I would describe those as, again, things that enable the financial forecast. You have to have the forecast right so you can raise money. You have to do these different things. And you could argue, yes, you have an FP&A person that helps you with that, but bottom line I'll stick with is you own the financial forecast, and you got to make sure you're delivering on that.
Got it. And when you say you own the financial forecast, do you kind of review metrics every day? Do you look at dashboards, or is it more of talk to people, talk to your team, figure out what's going on where, and track things? So are there like particular metrics that you dive into?
So yes, and in my mind, I'm talking about that financial forecast as the output, the final output of a long stream of things that happen to enable that. Think about all the input drivers, and so you'd have metrics around those drivers. And so you'll have someone whose job is accounts receivable, or their job is treasury. And what was interesting to me before I was a CFO, and then actually as a CFO, is like, because you're so focused, and I can see in my mind how every metric in the business ties back to that financial forecast, so that when something is escalated to me as approve this new vendor, I know exactly how that's going to impact the financial forecast. I know if I have cushion for that to add that ask to the vendor, or I know if I have to negotiate harder to get additional savings because someone else in the organization is doing something, and I need to be able to create capacity for that other new hire we have in the other part of the organization. And it's probably the only role that has that complete holistic look at what is leading into that financial forecast. I know, for example, are we light on our sales numbers, and our sales aren't hitting exactly where they need to hit? So we're going to not have enough, but I need to solve for profitable margin by the end of the quarter. So I need to find ways to save money in other places so that we can still hit free cash flow positive or free cash flow forecast targets, whatever we said they were going to be.
Okay. And so maybe two things I would like to understand a little bit better. The first one is the last thing you said, cash flow. how do you monitor the cash flow? So like,
Well, that's exactly it. So when I said forecast, for me, what I'm really talking about is free cash flow,
got it.
because there's obviously, think about your way down the P&L. There's like revenue, and you can go down to gross profit, contribution margin. You can even say operating profit, and you can say net income. People think, oh, net income's the bottom of it, but I actually like going below that, of adjusting from EBITDA with working capital to free cash flow. And so, and that's kind of my bottom line. So I'm solving the whole stack of the P&L with working capital down to whatever we're doing, how is that going to impact free cash flow? And you could argue that like 5 years ago, companies were just focused on top line revenue, and then companies focused on gross profit or contribution margin. I've learned through experience that free cash flow is really what I need to be solving for consistently.
Got it. And so essentially what you're saying, your playground is the PNL. And that information is populated somehow. How do you, let's say, populate the working capital? How do you track the working capital? Or who does it for you?
Let me clarify then the point of down to free cash flow, because the way you get to free cash flow is that should tie with the change in your balance sheet. So if you have a change in your balance sheet period over period, that should equal what is free cash flow. And they're both calculated differently, but that's why it's such a powerful metric, that it actually allows me visibility to what's happening in the P&L and visibility to what's happening in my balance sheet. And so if those numbers don't tie, I know that there's something I'm not understanding on working capital, which is really the change in periods from AR, AP, inventory, treasury. Like, as those things are changing on the balance sheet, if I'm navigating down to free cash flow on the P&L, I'm actually able to understand actually all three financial statements: balance sheet, P&L, and cash flow statement of cash flows. And that's, again, I don't know anyone, there's not really anyone else in the organization that has the full concern on all those levers and how they all fit together.
Got it. And I'm guessing all of this is done predominantly in Excel sheets or large accounting softwares that get you tabular data that you can kind of plug into, or is this use something else?
All of the above. So again, in the CFO's role, usually you'll have, so I work in my organizations to get to the point where it can be all automated. You mentioned earlier, I have this technology background. So that's really my passion, is getting it to where it's all fully automated. And then I want the systems to give me the insights out of the box. But usually you'll have your kind of your accounting, which is looking backwards in your ERP accounting system. But then we're talking about a forecast, and that is oftentimes done in a P&L. But I've used Anaplan. I've used lots of different planning softwares that you could use. I've also, the idea people work towards is saying, well, we're going to get the baseline of those forecasts also in the ERP system, and that's possible, but it's just difficult to manage. So yes, it usually ends up in a spreadsheet, and it's, I guess the main point there is the data rarely is available across all systems. And we're talking about systems. I'll also throw in there, in the CFO role, I'm considering the annual forecast, I'm considering the quarterly forecast, the monthly, depending on the size of the organization or the cash position. Sometimes I have to worry about weekly, payroll numbers and how are we going to hit those numbers. So it's a lot of data that you're always trying to have your head wrapped around. And what's interesting, again, specifically about that CFO role, is I can look at a number from anywhere in the organization, and I know when it's wrong. And when I was a controller or a VP of finance or these other roles, it surprised me. How is it possible that the CFO, I was working for this great CFO, Keith Taylor at Equinix, and he's still there, and he could look at numbers that I prepared, where I spent a lot of time preparing numbers for him. You could look at it and say, there's something wrong in that number right there. And I was earlier in my career, I didn't understand how he could just pull that out and see it. But as a CFO, you can. And I asked him one time, how do you do that? How are you able to see, like, how did you just see that number instantly that was wrong? And it's because, like, when you're so down in the weeds of looking at a particular part of the process and tying together things, and I'm trying to match numbers in a spreadsheet, sometimes just coming in with fresh eyes and knowing what we said last time to investors, from that investor standpoint or the board standpoint, what we told them before, and you can see what's different from what we just told them. But if you're in the day-to-day details in a given part of the process, there's just a different vantage point. Think of it from like someone standing on the tower looking at what's happening versus someone kind of fighting in the field. You can see stuff differently than other people in the organization might not be able to instantly see where there's smoke or an issue that comes up.
Got it. So basically, get all the data together, look at the insights, keep an eye on the working capital, keep an eye on the spend, keep an eye on all these processes, and essentially have a kind of a Hawkeye view, far up there, saying, okay, exactly this is what is happening in my organization, and these potentially are pain points or certain places where you want to nitpick them.
Yeah.
At every certain period, right? So maybe
yes, but you just listed out like a list of different areas of the business, and they're ones that I was just describing also.
Yeah.
It would be inaccurate if I didn't describe one that's, I'll say, most important. One metric, one area of what impacts the financials.
Yeah.
The most important metric overall, you can talk about cash, call that at the bottom of everything, free cash flow. But I'm going to say revenue, sales, like the CFO cares deeply about sales, because if to the degree that sales are happening and we're hitting our growth numbers, then that's the biggest driver of your forecast overall. And to the degree that it's not, then you have to focus on, do we have enough cash? Do we have, like, a lot of other problems can be solved if you're hitting your sales numbers. And some of the easiest ways to resolve free cash flow challenges or to have problems if these aren't resolved is the way you structure deals, the way your salespeople are doing their deal desk. And, if they're like giving away big discounts or not being aggressive enough in their sales levers they can pull. I just want to emphasize that sales and revenue is critical to the CFO.
Yeah, so actually that would be my next question. Like, how involved do you get into these business model discussions, looking at pricing, target markets, maybe even going all the way to sales and marketing as a function? Because you can see the numbers, what potentially, like what actually worked. How much of that kind of takes away your time, and you take it all to the other functions?
Yeah. And as you said in the introduction, I'm a little bit different than other CFOs. And I've actually had that feedback as I've worked with CEOs. Is I come into, a lot of times I've been hired into a role for a CFO because they want someone who can help manage the board, who can create the forecast, who can do that, really call it pure CFO type role. But then the way that I'm able to help achieve those financial results is I like going back then and engaging with the head of sales, the head of engineering, the different owners of those different drivers that lead into the financial results. From my point of view, financials are an output of the operations. And I'd say I'm very involved, but it's important to respect their role. And the key point there is, as the CFO, the investors and the board are going to hold you accountable if the numbers are significantly off. And oftentimes it's the CFO that can be a revolving chair. If the numbers are missed, they're the one who are going to get impacted. But in order to protect that role and protect myself, what I like to do is have every number, every leading indicator into that forecast is owned by someone in the business. And I make sure that they know that the board knows that everybody knows this is the sales number that was coming from sales. And I'm going to do everything possible to help them achieve that, but they're really the right ones to define that number coming from the sales, as an example. Now, as a CFO, what I'll also do is build in cushion the fancy word is contingency into the forecast to protect everyone else, but also to protect the role and the accuracy of what I'm forecasting.
Got it. So can you maybe spend a little bit of time in terms of how do you do that? Right. So here you're talking about talking to a lot of people, understanding their metrics, understanding, let's say, the finance office's metrics, mapping those things, attributing everything that you're seeing on that balance sheet and the P&L, and then going and doing the communication. So how much of that is in-person discussions? How much of that is, say, tools? How much of that is number crunching? And
Yeah.
here again, I know you are different. So I want to see
Yeah.
where does technology play a role here?
The way I became a CFO was by doing what you just described. And I can go into back. Actually, let me just touch briefly on the background because it'll help explain the story. So yeah, master's in information systems, technology focused. For me, it's all about the data. But then I was working at KPMG for 6 years and I realized, well, I might as well get my CPA because otherwise it'll just seem odd. And so I got my CPA. So then I was hired into this large organization and helping doing kind of data analytics, risk compliance. And it just reached a point where I was solving financial problems. And I was trying to figure out the answer to this question, actually, the one you just asked of, there's so many metrics across the organization that you could argue are important, and they are important for operational leaders of those businesses, efficiency, effectiveness, all these different things. But what I did was I went to the CFO, I went to the board, and I said, what are the numbers that they're reporting regularly? What are the ones that they care about? What are the direct leading indicators to that financial forecast? And I traced it back to the key metrics that directly tie to that board and auditor and financial statement numbers. And so of maybe a dozen, or there can be hundreds of operational metrics, but by focusing on the ones that have direct line, I can tie a direct line to that financial forecast. Those are the ones that I focus on. And it actually became very powerful and really helped those operational leaders, because for them, they care about lots of different things and different aspects of it. Marketing, you can talk about all the things that marketing wants to do. But if I really focus on what is the return on ad spend, what is the cost of acquisition, customer CAC, customer acquisition cost, what is the customer lifetime value for sales, that helps define how much we're going to be able to give as commissions on different things. By identifying those metrics for those operating groups, it really helped focus and enable less, I'll just say less metrics for reporting.
Got it. And how frequently do you do such forecasts? Like, do you kind of do something monthly, quarterly, yearly, or there are certain forecasts that you prefer to do at a slower cadence, certain things that is pretty much done weekly? Like, how does your calendar look if I were to make a calendar of just doing the forecasting activity?
Yeah. Finance is really driven by the calendar. Like it's all about the calendar. And so you have, I'm going to describe in general, but every company might shift this a little bit. So it starts with, you have an annual forecast, and oftentimes you'll do like strategic planning, maybe starting in August, September, October timeframe, because by the end of the year, you have to have locked in, here's our new budgets, here's our new forecast for the year. In that strategic planning, you're doing a 3 or a 5 year forward planning. And after you lock in the 3 or 5 year kind of goalposts, then you have to do, okay, that's maybe done down to a quarterly level of detail. You now have to do the budget for the next year over the monthly numbers, and you have to take that down to department level P&Ls or functional cost center level P&Ls, so that by the end you have in December, you've got an annual forecast. And there's always the dream of having the rolling annual forecast. And I do that. I like having a forward-looking 12-month forecast, but that's just, call it budget planning perspective. And then with that baseline, you're then doing quarterly forecasts and quarterly plans where I'm looking at, for this quarter, what's our forecast going to be? We talk about a 3+9 and a 6+6 and a 9+3 as far as months of actuals versus months of forecast. And so every quarter, I have a reforecast that I'll usually do in the second or third month of the quarter. And within the quarter, I'm then talking about a monthly calendar and, the monthly close, but I don't have time to be reforecasting everything each month. I'll have just kind of a trajectory view of seeing where I'm going, but it's all about landing that quarter's numbers when I'm within the quarter. And then at the end of the quarter, I'm reforecasting how I'm going to land the year. So the only way to have all of these metrics is to look at what is the cadence of what I'm currently focused on as far as the next horizon. And last point to what you just described, if you think about the different metrics, there's a timeliness to them. So some metrics, financial close metrics, are only available once a month. So I only really look at financial close metrics once a month. Now, there are accounts receivable, AP, revenue, sales numbers that are available more frequently. And I'll look at those on a weekly or sometimes even daily basis, but I won't try to, they're only closed once a month. So I'm looking at the leading indicators for the monthly close, daily, weekly, and I know what ones those are. And in reality, there are relatively few metrics that shift on a daily basis within an organization that have an impact. So sales could be one of them. Usually you make payments to vendors once a week. So you'll do that. You'll usually have maybe on Thursday, I'm going to review if I need to in the size of the organization, what payments are going to be made on Friday. So that's a weekly number. So by looking at what the cadence is of the metrics, I can really schedule myself what I need to look at when, and that's how you do it.
Got it. And on the payments, so as a CFO, do you actually monitor like large bank transactions and approve them, or it's more of stuff done by each of the function owners and you are just made aware of? So how much of do the payment, don't do the payment is under
That's entirely driven based on the cash position of the company and how much cash you have available in cushion. Ideally, as a CFO, I'd love to focus on strategy and forward-looking in sales, and I'll just say that's a lot more fun. But
so what is your runway there? Like let's say as the medium conservative kind of a CFO or an extremely conservative CFO, like what is a typical runway? Like when would you say that okay, that there is likely to be a constraint and I don't want to, like I want to monitor everything that's going on beyond a certain limit.
Right.
How does that work?
Yep. I've been in two situations where I was managing companies that were coming out of bankruptcy, and I had to. Anyway, I think every experienced CFO now has been in challenging cash constraint situations, and the easiest way to answer your question is if you have, say, $1 million sitting in the cash in the bank, and you're just paying vendors, you can just tell your accounts payable, pay our vendors, and I'm going to manage on a monthly basis our P&L and make adjustments. I'll look at it when we close the books on the month end, then that could be fine. And maybe it's many millions of dollars that do that. But if you start getting into what's usually affectionately called stretching vendor payments, and we're going to have to by default stretch vendor payments a little longer, or start individually stretching individual payments and picking out who are we going to be able to pay. That's usually the key trigger. Is if we have to start deciding who are we going to pay this payment cycle and who are we not going to be able to pay, that's where, as a CFO, you should really get involved. Because if you just don't have the money to pay all your vendors, then you're basically placing bets on who's going to blow up and how mad they're going to be. And emphasize key point on there, you want to protect who vendors you have to pay, because what you're protecting is making sure you can pay payroll and making sure you can pay your critical vendors, that if you stop paying them, your whole business stops. That's where ideally the CFO should not have to be involved in that. That's treasury, that's accounts payable, but it happens.
Got it. So essentially you do keep an oversight of the AP and AR functions at a global level. So it's like based on the money coming in, you take a call on how much to monitor.
Right.
Couple of things. So one is, when we are talking of monitoring, where does compliance come into play for you as like it is something like a new policy is released and you wake up in the middle of the night, or is it something which is also a regular thing you need to worry about, or the upcoming audits, or how does that work?
Well, as a CFO, worry is a careful word. But I'd say the CFO should always be worried about compliance, should always be aware of compliance and or expect compliance. That's the key thing, because if it's just not acceptable from a board perspective or from investor perspective, if there's something that isn't comply. I mean, bluntly, I'm also a certified fraud examiner. I've done forensics audits. If I smell something that's not, as a CFO, okay. Sorry, let me clarify something I said earlier. I said that the forecast is the most important thing. That's only because integrity is there's no question about integrity. That's not even, yeah. There's no flexibility there. It's just not worth it, bluntly, as the CFO. You're the one who has to protect the whole organization from making stupid mistakes. Let's just put it that way. And you can't bend in your integrity. It's not worth it.
Got it. And I think that is pretty much loud and clear. So let's say when you are in a
now let me go ahead and ask your question, but there's the what if situation. So go ahead and ask your question. We'll see where this goes.
Yeah. So the question was more of, what do I do when I have way too many regulatory kind of agencies to worry about, and hence the what if, right? So as you grow, I deal with multiple markets, I deal with multiple whatever industries and whatnot.
Right.
Then what happens?
Exactly. This is being recorded for posterity's sake, so we'll see if an auditor comes and calls me on this at some point in the future, but that's okay. I'll stand by my answer. Yeah, so there's kind of two aspects of compliance. There's and I have all these certifications on the wall behind me, so I can speak to this with some awareness. There's compliance because there's a risk that we're trying to mitigate that's bad. There's something that's really bad that's going to impact investors or the business or a problem. So I'll call it a genuine problem. And from that perspective, I love having someone come in and review what we're doing, because it looks at stuff at a more detailed level than I might have been aware of. Now, as part of my role as CFO, is I'm going to make sure, and I expect my team to make sure, that those sort of risks, we're not dependent on an auditor coming in or a compliance regulator person coming in to find those. We're not doing those things because an auditor is going to come look at it. We're doing those things because those are the right things to do to mitigate the risk of our business. So my first point is, you don't let the auditors control your business. You're not doing something in your business because the auditor told you to. You're doing something because I'm the leader of the business and I say that's the right thing to do. Mm-hmm. And that's an important distinction, because especially when you have like big PwC, KPMG coming in, and they're going to start telling you what you need to do or giving you recommendations. And they're going to, even if it comes down to it, say, well, I can't sign off on this because you have this compliance issue. I found lots of situations, I've observed lots of situations, I should say, where an auditor is going to come in and find something that doesn't match the control design criteria. And so they might call that a control deficiency. But then, even though you might start out with a list of a dozen different control deficiencies, it then comes down to a discussion, hopefully with the controller, but maybe with the CFO, to say, yes, the control was designed that way, but even though that one might have broken because someone in the organization did something that didn't match the documentation that was expected, we have this other control that mitigates the underlying risk. So therefore, that risk is mitigated. And therefore, yes, we'll fix that, but that doesn't translate into a material weakness because I've mitigated that through other controls. So the CFO's role of being that kind of final answer of management decision, there are other controls where you could say, well, you didn't do this. You don't see any other material weakness. You don't see any other mitigating controls. And the answer is, okay, well, I, as the manager of this business, as the financial, fiduciary responsibility of the business, I'm deciding that that's okay, and I can say that's acceptable for the overall risk of the business. That's okay, and that's a discussion with the auditors that it's interesting to see. It's not about pressuring the auditors. The auditor, I worked at KPMG at these. I'm a CPA, so it's a discussion to be found. And my main answer is, if you just let the auditors run all over you and start leading the business and managing the business, the reality is kind of the card you can play back to them is they don't want that accountability either. If you say, well, I just did this because the auditor told me to, that actually puts a lot of liability back on the auditor, and they don't want that themselves either. So it's a balance that you have to find together. It's not a trick. The last context for this whole dance that you see between regulators and auditors and the business is, we have a business to run. And to the degree that these regulatory and audit things start distracting from our ability to manage and run the business, then it actually creates more risk for the business than the risks we're trying to mitigate with the auditors. And so sometimes there's a beautiful rule in auditing, which is if the cost of the control is more cost than the risk that you're trying to mitigate, then that's a bad design control, and you can just say, we're not going to do that control. Last point, you're touching on a topic you can tell that I like a little bit. I've been on both sides of this. The last point there is, as an auditor that's coming in, or any regulator that's coming in, that have respect for the, call it junior associate person that's doing the respect. It's not, they're not bad. They're just doing their job. So there's no value in being mean to them in any way. Like, be respectful, and everything works a lot easier. However, they have a fixed number of hours to audit. And so on one hand, I like to have everything stacked up and ready just to give to them when they come to audit, and that makes things easier. But then they're going to come back with a list of things to poke you on. And my point is, per their job, they have a fixed number of hours. They're going to keep digging and digging and digging until their time is out, or until they found a material weakness. And so my reason I say that is, if you work really fast with them to help fix whatever they think is a problem, they're just going to dig more and find another problem to talk to until they've gone through all their hours. So my point is, it's a little bit of a balance between helping them and helping them be efficient at their job, but not necessarily, like, if they ask you something and you have other stuff to work on in the business, go work on your other stuff. And if they have to wait a day or two till they get an answer, that's okay, because if you help them answer that one question, they're just going to come with another question the next day, and you'll miss out on managing your business, which is the most important priority.
Got it. And so all throughout, we have been referring to kind of communication, right? So especially, say, stakeholder communication being a core part of both way stakeholder communication. So essentially, you reading from what the board or the investor or they tell you, plus you sharing the information as things progress. Similarly, in the case of compliance, we have the auditors versus the CFO, or the auditors and CFOs, however you may want to put it. So how much of your, like, you, I mean, literally you as a COO and the CFO for Lean Law today, how much of your time goes in making slides, or making those presentations, or making the content that you will share out?
Yeah. I'll answer it this way, and then I'll get to your question directly. But before I did technology, I always liked technology, but in growing up, I did a lot of theater growing up, and I liked creating stories, and I had a lot of plans to have that be my career. What I found is the idea of storytelling and having the right story to tell and being able to tell it from a position of authenticity, the same things that you do in acting are the same things that an executive does in his storytelling of what you're going to communicate to the board, or even what you're communicating to the employees, because you have to be authentic and you have to be true. And I'm not making up fake stories. To call it acting creates this idea that it's false. but no, it's absolutely accurate. It's just how do you communicate effectively and tell the right story? And there was a long time, and you learned this at consulting, to use PowerPoint slides as a way to structure your communication, and it enables key structuring. And I do have high expectations on, and I like creating PowerPoint slides for communicating to large groups, and even for helping me structure my story. But for a lot of the communications we've been talking about now in this conversation, a lot of times I'll have the deck, but I found, and that helps me have my kind of script for my, think of it as a play you're doing. But to be authentic, a lot of times I won't be showing the deck. We'll just talk and we'll have the story. And that's kind of like enables me to be accurate, but they receive it better if it's just a discussion as opposed to like call it death by PowerPoint. Now, to answer your question, how much time do I spend on PowerPoint slides? I've been doing this a long time, and I know what works well. I know how to be very efficient at it. When I come into an organization, I like to make sure my designs are consistent. And to be fair, I mentioned Keith Taylor before in Equinix. A lot of my designs are the same designs that I made back then. And those are pretty standard things across financial organizations. So I my team I design it, and then I have people on my team to create those. But I'm constructing the story a lot of times, what the messaging is. That's part of the forecast.
Got it. So basically, reusing templates, you own the backbone, you own the overview, but the content probably will come from your teams or individuals who own those functions and look at the data day in, day out.
So I own the story. And let me just clarify one part on that. I was listening to one of the big venture capital people who are an influencer in the space, and they described that at the stages of the company's life, when the company's first starting out, the story is much more important than the actual financial numbers. Mm-hmm. And then later, when there is, because you don't have the revenue to justify what you're going to do, but later on, the numbers become much more important. You can try to spin the story however you want, but the numbers tell what's actually happening there. And so either way, it's the story. But so I'd say, I was saying before that I own the forecast, I own the plan. I own the story and the forecast of what the company is doing overall. And obviously the CEO and the COO and others have different key roles, but how to tell that story and how it all ties together. Some might argue the CEO owns the story for the whole company. That depends on the company and the CEO probably. Got
it. So coming back to the forecast. So how do you validate the forecast? Like I get the point where there are teams and data coming to you, and you have a Hawkeye view, and you're looking at all of it, and you can potentially spot wins, spot alerts, spot anomalies, all of those. But is there a place where you actually kind of validate it in terms of, is this correct? In addition to obviously the trust you have on the team. So
well, so much of what we've been talking about has been internal to the team, internal to the company. And so when I mentioned before that strategic planning, there's two ways that I validate the forecast other than what we can see internally. And I'm going to say that it starts with the customer. And I really am going to say, do we have understanding the customer's journey, understanding the customer's problems, their pains, what they're experiencing. Too often a company is so focused on, I'll describe it as their own navel, their own belly button, and they're looking at their own stuff that they're not looking at what the customer actually problem is. And then if you can validate there is a problem and we have a solution to that problem, kind of product design things, then you can go to what is the total addressable market for that, and is there demand for this, who are the competition, normal strategic planning, corp development type things. A lot of times as CFO, I'll come into a company and they originally raised money based on one story, one strategy, one market expectations. And a lot of times I've been hired in because it didn't work. It just, that's why the CFO left and they could hire a new one. And so you're really having to almost reinvent the company, reinvent that market positioning. And so there's two parts to it. I'll look at macroeconomics, external drivers and indicators, and show I'm looking for trends that I can ride. And then the second part is I'm looking internally. So based on that, I'll define what our forecast needs to be. And then I go internally into the different leaders of those departments, head of sales, head of engineering, engineering. Can we build a product that can meet this new product market demand? And can we get it done fast enough to capture the demand opportunity? Sales, can we sell that product? And so I need each of those internal stakeholders, one, to say, yes, we can, and here's how we're going to do it, and take ownership and feel confident they're going to do that. So at the end of the day, as the CFO, I'm not actually owning any of the key inputs. I'm owning the end result, but I'm confident that we'll be able to deliver on that result because I'm trusting the external and internal stakeholders that it all fits together in a coherent story.
Got it. And what are your sources for this kind of external input? So, I mean, are there any sacrosanct sources that you always look out for, or is it more of look at everything that's happening and create a view for yourself, especially for the macro movements?
Yeah. This is my third time naming. I'm just having fun naming Keith. Your questions are making me remember, again, Keith Taylor, Equinix, because I learned so much from him. He always had a TV in his office that was always playing like Wall Street news, like constantly. Yeah. So I mentioned, I don't have that in my office, but I'm constantly aware of what the market is doing and what trends are happening. Twitter, you can say, is a good source for stuff like that nowadays. But just being actively engaged, be engaged with industry peers of what's happening in the market helps you understand. I'm distracted from the main original question that you just asked, but
no. I think you gave me the kind of the key there, right? So the question was that what are your trusted sources for the external information, and you already talked about your it may be a Wall Street related thing, or it may be Twitter, or it may be certain kind of trusted streams of information.
Let me give you two more quick ones, just real fast on that. You might be thinking about some market trend or some unique thing that your company does and a problem that you're trying to solve. And I learned a long time ago, someone taught me in a sales training that if you just take the keyword that you're analyzing and put in a Google search, like that keyword with trends, like whatever, legal technology trends, Google search, you'll be surprised at and then go images, look at images. Lots of stuff pops up. And that's a good source to just look at kind of macroeconomic trends. The other one is, it's been amazing to me to use, I won't name an LLM because you all have your favorites, but use an LLM an AI to search, and you'll just learn more about your own market trend opportunities and macroeconomics. And, I now use that. Think about that as being an investor analyst or an investor who's going to poke at your business, and you can explore and consider new opportunities that your own mind might not have thought of.
Got it. Yeah. So let's say your day was a pie, or your month was one single pie. So you have forecasting, you have data, you have internal stakeholders, probably external stakeholders or upward stakeholders. You have auditors or essentially other agencies where you interact with consistently. You have just this whole thing where you need to have an overview of all your finance functions. It may be daily, weekly, however it works for your industry or the company. And you have your external eye out or information coming in from outside to help validate what's happening. Whether to help validate what's happening internally is correct, should it change? And based on all of this, there is also your involvement in strategy. So if you had a pie, what would be your top three pieces?
Yeah. I'm gonna reframe the question in a little differently. Is as the CFO, in any given point in time, I have a quarterly plan I'm working against, and there are due dates on that calendar that I just can't miss. So when I first come into an organization and it's in disarray, one of the first things I'll do is make sure that our accounting is solid, that we're closing our close calendar is in schedule, and that we're closing the books well. And that means that integrity of trust the financial numbers is priority number one. Can I trust what's happening in our accounting? The next thing is, okay, what's the forecast? Once I have a solid foundation to build a forecast, look at the trajectory we're on, what does the forecast look like? And how do we build a forecast for that trajectory? And then each month, then, how are we landing against the forecast? Every day of the month then comes down to working on either doing things that are going to enable achieving that forecast, which requires growth, or mitigating risks that are preventing me from achieving that forecast. And that is all of the variety of things that you listed off. I'm picking the highest impact items or the biggest risk or the highest growth items that I am going to do. And because of that broad scope, yeah, there's lots of parts I can talk to around sales, product, engineering, marketing, all the drivers, where what I'm really doing is working with those individual stakeholder owners and trying to help them. Like, I have a discussion tomorrow with the sales leader where he's like, the most we can do is this amount of sales in the next quarter. And from my prior experience, I know we can do more than that because there's other levers that I know we can bring in and help him with, but I need to coach that sales leader to help them see how they can get to a higher number. Now, there's all sorts of dancing that happens in that because they want to commit to a lower number so they can get more quota when they beat that number. But that's an example of me working with a sales leader so that I'm doing whatever it takes to grow or mitigate risks to achieve that quarterly forecast that we worked on.
Okay, so you want your dream AI agent to do all of that?
I'd like the dream AI agent to help me identify the biggest risk areas or the biggest opportunity areas, to identify alerts for what I might be blind to. So there's operationally things that just need to happen, but I need something that's telling me, it could guide me on where I should be focusing my time, because there's so many things pulling me in so many different directions.
Mm-hmm.
Understanding all those things, this is where AI is really good. AI is really good at looking across the board, at seeing all the things and picking out the critical priorities that I need to be managing. I've looked at some AI tools now, and the vision of it sounds amazing, but then it's so, like this one, I can create a summary for you of what's happening in sales. And I thought that would be awesome. And I have an AI tool that helps me do that. But then it's not actually all that great because I'm involved in the some day-to-day sales calls. I'm looking at other key metrics. It's the blind spots. And it has to be fairly detailed into insights down within the processes that I wouldn't otherwise be aware of from regular reports that I'm getting.
Okay, so if I were to take that to your forecasting task, this AI agent should be able to maybe validate all the information that's there on your documents, and maybe even point out tiny things which could have been missed out,
Yeah, things that are creating
foresee some mishap coming, and things like that.
Yeah, I've worked in this a lot, so I'm going to describe it a little bit differently. As for each of the input variable metrics that I have that lead into that forecast, you can think about a range of if it goes above this range, below that range, there's risk. And so normally then I have metrics that raise an alert and someone goes and digs into that alert cause. But that doesn't require AI to do that. That's just dashboard reporting setup. The AI part could be under that covers, kind of beyond that scope. What are the underlying risks that before I see it at a month-end close, that could indicate I can impact it before it shows up and closes on the books, would be very helpful. And then the other part where AI can be really helpful is, I'm the CFO. I have way too many things. I don't have time people have to wait to talk to me, and you can use Slack and whatever else to make that faster communication. So I try to remove those barriers. My point is, if I could have an AI version of me that my team can ask questions to, and they can. A lot of times, what I'm doing now is I'm coaching my team to take the transcript from a call or take a financial report. Come to me. I want insights. I don't just want a problem. Come to me with insights and recommendations, not just this number is off from that and leave it to me to figure out. I want them to come with recommendations.
Got it. So essentially, tell me what I may have missed or I don't know, and take away my grunt work or take away things where it needs you to figure out the insights, you to rather ask for the insights and then figure out the insights. So your Dream AI agent is kind of a digital twin as well for you, who would do all the data thing or the communication on your behalf.
Yeah.
So I'll actually switch to a question and maybe wrap it up in another question that I have. So there's an audience question where it's saying that uh, to what extent would you allow AI to look at, say, compliance and audit? So essentially, what kind of guardrails do you expect the AI to have? And the theme of the question from my side is like all throughout we have said integrity and trust is the core here. How do you imagine this Dream AI agent will gain your trust? So what is like it just needs to do this right, only then I'm going to even entertain it.
Sure. I think the industry has evolved on being able to rely on AI with financial numbers. If you think about like even just a year ago, it was completely unreliable. But now the idea of clustered agents, each doing different parts, there's ways to train AI to provide good numbers. So having technical architecture that works is a key part of that. Even with hallucinations back previously, there's ways to get it to work. So the short answer is I like to load. I just did this last week. I like loading in, train it up, like load in different data that you have, your financial statements, your board reports, your different things, your detailed customer pieces, and then let it provide you considerations. Ask those questions like, what am I missing? What are other opportunities we could use to grow this company? What are other market opportunities? Like it can be the best advisor. Like I like to joke that it's like your free McKinsey consultant. It can provide amazing insights for you. As far as the compliance specific question, compliance is pretty straightforward. If you stop thinking about it as a scary other thing, there are industry standards. You think about ITIL standard, ISO standards. It used to be COBIT that dates me a little bit. That some of the frameworks that exist, and I can imagine you load in your financial statements, load in information about your business, and then just ask the AI, compare my business to these COBIT standards and give me feedback. I mentioned the sales rep before. Just this week, we've implemented an amazing capability. We're finding it amazing, where we use a technology that records all of our sales calls. And then we're able to use AI compared to this framework of sales training to say, please provide us feedback on where the sales calls did well according to the sales framework and where they didn't do well according to the sales framework. So on one hand, you could call it a sales ops compliance. And now after every sales call, we're posting to a Slack channel the synopsis of what happened on that sales call so that the entire sales team can learn. Really what I'm doing is teaching them value-based sellings, solution-based sellings as opposed to like widget-based selling, feature selling versus value selling. And so I'm training them on this. We've done little trainings on value solution selling, and I'm now using compliance with AI to post after every sales call. We can all see how we did and get feedback for the whole group to learn together. And I think it's the same thing with compliance from a financial audit compliance perspective. Like here's our audit framework. I can feed that into an AI, and the AI could call out what we're doing well or not doing. You can even have, this is a little bit scary, but I know different AI tools that watch your email and your Slack channels and all these different things and recorded calls. And to the degree that the AI calls out compliance issues, it can do that in real time. And so as opposed to just being periodic sample-based testing, you could have it do all compliance issues.
Yeah, so your dream AI is a kind of an advisor and a companion who is personalized and who pretty much can access all kinds of data and respond to those. So basically, you're saying it can be a lazy listener for every place where you have allowed it to get the access, especially when it's to internal system, but externally probably just listening to what is most relevant to you. So
let me briefly describe maybe my part of it. You can ask whatever questions you want, but I'll wrap it up with this comment. If you look at my LinkedIn profile, I have a idea of maturity capabilities for businesses, like ad hoc and then standardized is the next one. Sarbanes-Oxley, a lot of audit compliance is about having repeatable standardized processes, and they do sample-based testing for compliance. The next level up I call rationalized, which you think of as automated, like it's an automated business. And the next level up was dynamic, which is this AI doing other things. I was having a discussion yesterday with somebody about the idea of having a rationalized automated compliance and a AI-driven compliance, where it's not just looking at sample testing, but in an appropriate way, it's watching for trends of risks, watching for trends of compliance. And the reason I brought it up, the context of that discussion was, think about it as an investor or as a venture capital group. If you knew that this company had rationalized compliance or AI automated compliance and AI capabilities for growing the business, and you were able to certify that as opposed to just an audit certification of the financial statements, you had certified automated compliance and growth, that would be a very different investment profile. And I would argue that companies that aren't doing that are actually the ones that have risks of not getting investments, and they have a bigger risk than because some control was missed in somewhere down in the organization from a traditional audit perspective.
Got it. And do you kind of see a challenge there? So this is also an audience question where what are your biggest concerns? So let's say we had the AI dream AI agent beyond your kind of agentic AI tools and that automate processes. Is it cost? Is it complexity? Is it just trust and accuracy?
No, the biggest, I can say this with ultimate confidence, the biggest thing that's going to delay your ability to get to that future state is people. And it's the people's ability to engage and change their mindset, change with you. That the people are what's going to define how fast you can make the change. 5-10 years from now, every organization is going to be like that. The question is your organization even going to exist then? Because were they able to change and adopt these new future ways? With Lean Law, you just saw him there. I've been there 3 months now. And in 3 months, we went from ad hoc to automated, rationalized, almost dynamic. It's been amazing how fast we've been able to make the change. I give a lot of credit to the people that I was able to energize them, get them excited. And one of the things I'm working on is this idea of an on-ramp to AI. How do you help organizations go from traditional ways of managing the business we all learned in the last 2-3 decades to how we do it in the next 2 or 3 decades?
Makes sense. So I think if we keep talking about it, we'll have sufficient number of people convinced towards starting to adopt it. So when I say talking, I mean is discuss the problems, identify the sweet spots, build technology that proves itself, and then you have adoption coming in. So
I think it brings job security. There's a lot of people who are scared of AI from a job security perspective. I'd argue the opposite. It's coming no matter what. So the best thing you can do is lean in and you'll always need the man in the middle. You'll need, you'll need, there's insights that we'll be able to bring, at least for the next, I'll say many decades, who knows after that. But throughout our remaining careers, there will be plenty of need if you just lean in and learn what you can about how to work it.
Yeah, absolutely. I think at that thought, and we are pretty much at the top of the hour. Thanks, John, for a very detailed discussion. So I enjoyed it. So
Me too.
it's like a lot of ideas flowing around and a lot of them practical, right? So we can pretty much build that stuff if we went out and built it. And thank to the audience for listening. Looking forward to doing many such more conversations. Thanks and have a nice day. Bye.
My pleasure. See you. Bye.